Welcome to Financial Focus, brought to you by Gulf Coast Financial Services founder and CEO, John Kirkendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the best of the best in financial services, 7 years and running, as named by the readers of the Lake City Reporter, the team from Gulf Coast Financial Services. CEO, founder, John Kirkendall here with us as always, providing the guidance and perspective to help to clarify the financial world and give you the information that'll help you achieve your financial goals. John, always a pleasure, and Happy New Year to you.
Well, thank you, Peter, and Happy New Year to you. I am really looking forward to 2022. I think it's hopefully going to be a great year for everybody out there, and we can kind of get back to more normal than we have been.
Yeah, always the optimistic outlook to start the year, high hopes of achieving resolutions. And John, by this time in the year, unfortunately, a lot of those resolutions have come and gone and been broken or forgotten already. But today we are going to talk about some of the financial resolutions. Those are typically on the list as one of the most common, and what we can do to actually make those resolutions stick and the goals that we have with them come true. So we've got a list of some of the common ones. We'll talk about those and then some of the steps that we can take to achieve those.
Yeah, Peter, I'm really looking forward to today's show. I think it'll be a great show for anybody out there listening as we start 2022. And there are a lot of challenges for 2022 coming up, as we know. And we're going to talk about a few of those today, too.
Yes, some of the headwinds that we will face, some of the big stories or challenges that we predict we'll see a little bit more of in the year, maybe years to come, because some of these don't tend to go away completely, John. We've also got a great list, the 2022 Financial and Retirement Planning Checklist that you have provided and made available to listeners to the program. 5 main topics: income and expenses, taxes, investment analysis, healthcare and insurance, and then key events. These are the milestones that we should be paying attention to as we enter into, and make it through retirement. Some key dates and milestones, some maybe trigger events that you should be paying attention to. It's all condensed into one fantastic list with a lot of sub-points and checks that you can check those boxes and make sure that you have addressed these issues. If you'd like to get that list, give a call to Gulf Coast Financial Services, 386-755-9018. That's 386-755-9018. But I guess, John, let's start with a few of those resolutions. What are some of the common ones that you hear about, and how do you help people make those dreams come true, those hopes come to fruition?
Well, you know, Peter, the number one, I think, on the list is everybody wants to save more. I mean, we started out the year, we've spent a bunch of money for Christmas. The credit card bills are coming in, and all of a sudden we say, hey, I need to save more. And how am I going to do that? And, one of the best ways to do that is to make sure that you're contributing to your company 401k, or if you're not, then you should be contributing to your own IRA, which you can do every month. And the easiest way to do that is just sign up for that payroll deduction and have the money come out before you ever see it. I've always said, and Brent, my son, did this with his wife. She's a school teacher. He signed her up for their 403B program and didn't actually tell her how much he was taking out. And she never missed the money.
When it happens automatically, it's funny how that works. We say, I need to make as much as possible so I can pay all these bills, expenses, live my life. Yeah. And then if we just include in there the automatic deduction so that we never see the money, it's almost as if we don't miss it.
Yeah, it is, Peter. You just get used to living on what you make. A good friend of mine, my mentor back in the banking days, told me that one time. He said, John, he says, I don't care how much money you make. If you don't save some, you will live on what you make, and your living will adjust. And he was amazed. I was amazing how that worked out. One year I got a $20,000 raise, and before I knew it, all that money was going and being spent. And we hadn't really changed our lifestyle, we didn't think. But evidently we changed something.
Yeah, it's amazing. The most stark example of that is when I look back over my Social Security statement and it gives the earnings history throughout the years, and I watch it just climb over the course of a couple, almost 3 decades now. But the earnings that went up, and it's like, wow, I don't really recall, having that additional money. It's almost as if I spent everything that I made or close to it. But along the way, I did make sure to make automatic savings part of my budgeting. So that certainly helped in hopefully getting me ready and prepared for retirement one day.
Well, that's right, Peter.
Maybe after 3 more decades.
Well, on the reverse side of that, everybody's resolution is going to say, I want to spend less. And so the way we can do that is get a budget and stick to it. And, we really believe in budget planning. If we have a budget, then we know how much we're spending and we will spend to that amount. I always used to tell people not to carry a lot of money in their pocket, because the more I found out, the more money I had back a few years ago, the more I would spend. Mm-hmm. But now it's so easy to pull out the debit card. I'm not sure whether that really works anymore.
Yeah, I was going to say that plastic has replaced the cash, and it's almost even easier to just swipe the card. Kind of painful to actually pull the cash out and use it. So, kind of stuck one way or the other there.
Well, it might be easier to tell everybody to go back to money, and then they would feel a little bit, when the money was gone, then they would feel a little bit easier. It's so easy to give that card out and pay for things nowadays and actually spend a lot more than you planned on spending. So certainly working on a budget is certainly one of the things we need to do. Over and over again, we're telling our clients and working with them to get their legal documents in order. Mm-hmm. I'm totally astonished at the number of people that don't have a will or a power of attorney or a health surrogate form or a living will. Those are the 4 documents that everyone needs to have, especially in Florida, because if we die intestate, we have to probate the estate. Creates a lot of legal problems for the survivors.
Well, there are certainly a list of goals that each one of us have for what we would like to achieve. And then, John, maybe one of the most important, coming in to speak with a planning professional might remind us of a few that we had not thought of, because I think those legal documents, they just tend to slip people's minds. Maybe it's willful blindness, blissful ignorance, that I just don't want to think about this, and therefore it won't be a problem. But it is, and we need to address that sooner rather than later to not transfer that problem onto our family and loved ones.
Oh, that's right, Peter. It's something we really need to take care of. And we're trying to make sure that our clients have their documents up to date and that everything's in order. I've just seen too many cases where we've had a death, and it's created a huge problem for the survivors trying to get assets sold, real estate sold. Somebody in a nursing home trying to get a power of attorney over their estate so they can actually pay for the nursing home or the facility. So it just creates a lot of problems that we need to resolve.
John, a few others that, absolutely. A few others that I've heard that I know that you specifically help with is making sure that we are taking full advantage of those retirement savings opportunities, really supercharging that savings where possible in the home stretch toward retirement. And I know we've got some increased limits on that this year. The government has upped the amount that we can put into that 401k, starting college savings for kids or grandkids, gifting, giving, and just bottom line, becoming better informed with our money. Those are all goals that you strive to help your clients achieve each and every day there at Gulf Coast Financial Services.
Well, that's true, Peter. We try to look at all of our clients from a holistic standpoint and take care of everything that they need. Certainly, there are some ways that we can do charitable giving so that it doesn't create a tax problem for us. Since a lot of people now, because of the standard deduction, don't use the itemized deductions anymore. They just use the standard deductions. There are some ways that we can help them certainly do that. And also, on that key list thing that we came up with, where we have those special dates, don't forget that anybody over age 50 can actually, there's a catch up, and they can put more in their 401k or their 403b or their retirement account. And they certainly should be aware of that.
An extra $6,500 in those employer-sponsored plans,
yep.
which is more than I can even put into my IRA period. I'm under 50, a $6,000 yep. limit. That actually did not go up this year. That limit is still $6,000. If you're over 50, $1,000 catch up there, so up to $7,000. Mm-hmm. But the 401k, now the ability to save, including the catch-up provision if you're over 50, up to $27,000 a year toward retirement. And by the way, married couples can both take advantage of that. They can take advantage of a 401k at work and the IRA privately. And until tax filing deadline, at least, John, we can contribute for both last year's IRAs and this year's IRAs. So really an opportunity to get a chunk of money put away here between the new year and April 15th.
Yeah, and we also don't want to forget that if the spouse isn't working, there's the spousal IRA that we can contribute. So they can still contribute to the IRA even though they don't have earned income. And we don't want to forget that. It's just an extra way we can put money away.
Or the Roth IRA, another fantastic.
Roth is very good.
And John, you sit down and help your clients decide which side is better, prepaying the taxes up front or going ahead and getting the little bit of savings now on that contribution and pay the taxes possibly at a lower rate in retirement. But we have our questions and concerns about whether that's going to continue to be the case, right?
Well, we used to say that when you retire, your taxes are going to be lower. Our situation today is it's not. So far, most of my clients are living on about as much as they were making when they were working, and they're paying the same taxes. And we really, as you know, have talked about it on this show several times. We think taxes will be going up in the future.
Well, another thing that I realize when I look back over my Social Security statement is my tax bracket seems to just continue to rise and go up. And again, spending a lot of that money, I don't foresee that it falls or decreases significantly in retirement. Speaking of taxes, John, transitioning to kind of the stories that we expect to hear more about in 2022, taxes near the top of the list there.
Yeah, taxes are, because we know that because of the increased debt, we have to have more taxes in order to pay for the interest on the debt. As we have so far, the majority of the changes have been for higher income people, but there are also some things that are affecting the middle class. And so we need to be aware of those. Taxes have got to go up. The big one in my mind is inflation. As you know, we had almost 6% inflation last year.
You mean that transitory inflation? That temporary inflation that...
The Fed said it's okay to have high inflation. And so now we have the $1.25 store instead of the dollar store. So, yeah, I just read that the other day where the dollar store, somebody was telling me about it, the dollar store is now going to increase their prices to $1.25.
Well, if you go to the Federal Reserve economic data, and I know I've mentioned this before, but John, 20% of all of the dollars that are out there that are currently in circulation have been created within the last 24 months, 2 years.
20%.
So if there's 20% more, then that's about right for the dollar store to be $1.25 now.
That's right. But, also, last year inflation is a good thing from some standpoints, but it's a bad thing if it's too high. And so what's happening is because of the changes in wages and other things we had last year, prices are going up and we're getting more inflation. Now, we got the increase in our Social Security checks last year, 5.6%, but we also got a 14.7% increase in our Medicare Part B. And Peter, I don't know about the people out there listening, but in my case, I actually lost money in my Social Security check because the Part B increase was more than what I was getting on my check. So I now have less money.
Yeah, they give you something on one hand and then they take it back on the other. And I believe because of the Affordable Care Act, those two things are now directly linked, so that if there is an increase in one, the Medicare premiums or the Social Security, the other one will have a corresponding increase as well. So at the end of the day, I imagine a lot of people are in that same situation as you, John.
Yeah, and I think the thing is that what I didn't realize was that we have to have an increase in Social Security, cost of living, in order for them to be able to raise Part B. But evidently, they can raise Part B more than they give us on the Social Security.
Yeah.
So because of the Affordable Care Act and during the Obama administration, anytime that we get a cost of living increase in Social Security, we also will get an increase in Part B because we as recipients are now responsible for part of the losses in Part B. And so that's why it goes up, and it will continue to go up. And people will continue, I think, to see as medical costs go up, they'll continue to see the fact that our Social Security checks are actually going down, not going up.
Well, taxes, inflation, low interest rates, market volatility, probably going to continue to be stories throughout 2022. And if you want to make sure that you've got a plan that specifically helps you address any or all of those, give John Kirkendall and the team there at Gulf Coast Financial Services and Gulf Coast Tax Advantage, sister companies, a call at 386-755-9018. That's 386-755-9018. If you've got those financial resolutions, they can help you make sure that they are smart, specific, measurable, attainable, realistic, and timely. They can go through some steps to help make sure that you will achieve those into 2022. It takes more than studying or reading. It takes doing. It takes action. You can do it on your own, but it always helps to have a coach along with you. They are there to hold your hands and hold you accountable and show you how to take those steps. They do start the conversation with your goals, so they have those in mind when they're formulating the plan. And John, the 2022 Financial and Retirement Planning Checklist has a lot of the items included right there on it, one page, that your clients often had concerns about when they came in, but after that planning process, you checked all of those boxes, they are free to live their life with a little bit more confidence, not worrying about those items as much.
Well, that's right, Peter. And we're going to follow up on those boxes every so often. And if there's a major change in their life, or they want to move, they want to change location, change houses, we want to go back over that list and go back over their plan. We try to, we have gone to a great length to buy software and to buy stuff that will give us the best Social Security analysis, taxes. We look at, your investment, your opportunities as far as your interest rate risk tolerance overall. We want to make sure that we look at everything in the plan, come up with an income plan, which is an income plan I feel like is better than a financial plan, because with an income plan, I'm planning for retirement and knowing how much income I'm going to need, and then figuring out a way to make up my shortfall. And that's what we're all about here, is trying to handle all that for them. And also, like I said, make sure that they have all the documents they need for their retirement life and life in general as it goes forward. We're going to look at the individual. No one couple is the same, or no one person is the same. Everybody has different needs. Everybody has different situations, maybe a special situation. We just had a grandmother pass away, and we actually have a special needs trust set up for one of her grandchildren, and we're fixing to take care of that right now.
Yeah, well, we've got my wife's sister in the family with special needs as well. Always takes some extra special planning to make sure that if you have special needs in the family, that all of those are taken care of. I know that's kind of an extra step in the process. And a lot of times, those with that situation in the family, John, do take those extra steps and are more careful planners, I would say.
Well, yeah, Teeter. And as you know, as we talked earlier before we started the show today, we have a lot of situations now, especially in America, where we have mixed families, more than one marriage. So it's a tough conversation for individuals to have, a married couple to have, about how we're going to divide the money. And we try to help them with that and make sure that we've got that thought out. We don't want to procrastinate because we don't want to discuss it and then have something happen and not be covered.
That's right. Never too early to get the plan started. Also, never too late. Today is the day to get those plans put together. The first step in the journey is to give the team from Gulf Coast Financial Services a call. Call for a complimentary financial review, the financial focused strategy session, or if you'd like to get the checklist, the 2022 financial and retirement planning checklist, you can call, you can request that, go over it on your own time, and if any of those boxes are left unchecked, then call back and set up that time for the review, the appointment, and the strategy session. 386-755-9018. That's 386-755-9018. 386-755-9018. John, there's a few people in my own family that I'm going to take this list and give them as a gift to make sure that the plans that they have discussed can come true in the coming years.
Well, that's Peter. That's so relevant. Everybody really needs this checklist. If they have the checklist, they'll be covered. They can make sure that they've got everything covered they need to have. As we start out 2022, now's the time to sit down and go through all this. Not procrastinate. The sooner we start this year saving, making sure that we've got the right investments, we've got the right risk tolerance, the better the year is going to be. There are a lot of things that are unknown in 2022. But, hey, it's a lot of good things, too, and I'm looking forward to them.
Yeah, I'm sure there will be some surprises to come, but a lot of things that we can probably predict we will face. And if we have that plan in place, we can be better prepared for them. So, John, admirable goal to help so many across North Central Florida, Lake City, and all surrounding areas with achieving those goals. And we appreciate your guidance and perspective, the insight that you provide in doing so.
Thank you, Peter. It's great being here. Have a good week.
Well, again, ladies and gentlemen, John's looking forward to hearing from you, helping in any way he can. If you'd like to sit down for that complimentary review, the financially focused strategy session, or if you'd like the list, the 2022 financial and retirement planning checklist, pick up the phone, give a call, 386-755-9018. That's 386-755-9018. Or you can visit online, gulfcoastfinancial.net, gulfcoastfinancial.net. We look forward to hearing from you soon. Happy New Year.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting gulfcoastfinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kirkendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.